Under the new scheme of income tax, most deductions are not allowed. But still, there are few deductions which are hidden in the law which are still available. First is the standard deduction of 75,000 rupees. That is available to all the salaried people and the pensioners. Second is the employer's contribution to the NPS, that is the National Pension Scheme. This is limited up to 14% of the salary under the new regime. Only thing is, don't confuse this with the NPS of voluntary contribution. That deduction is not allowed under the new scheme. That is allowed in the old scheme. So in the new scheme, the employer's contribution to National Pension Scheme is allowed up to 14% of the salary. Third is the family pension deduction. Section 57(2)(a) allows 1/3 of the family pensions received or rupees 25,000, whichever is lower. And the fourth one is interest on housing loan for the let out property. So if you are paying interest on a home loan and that home you have let out, then that interest will be allowed as a deduction from the rental income. However, if there is a loss from house property, that will not be set off against incomes from other heads. That is, the interest expense is more than the rental income, so that loss cannot be deducted from income from other heads. So a lot of deductions like LIC, PPF, Mediclaim, tuition fees, interest on self-occupied property, education loan interest, donation, HRA exemption, LTA exemption, and self-contribution to NPS is not allowed under the new scheme. However, these four deductions, that is standard deduction, NPS deduction, of the employer's contribution, family pension under section 57, and interest on housing loan of let out property is still allowed in the new scheme of the Income Tax Act.